Hello and welcome back to the Fail Breakdown channel. It's Tuesday, the 18th of February. Today I'm going to be talking through a fail breakdown of the 6876 level that happened about 10 minutes after the open. This level was above all of our pre-planned entries because of the strong push up in the overnight session. So I'm going to touch a little bit on, how we can identify those levels and adapt our plan from the newsletter, apply the same systematic approach to the fail breakdown and the entry model, and still be able to execute successfully even if it's not part of the plan from the previous session and the newsletter. As ever, I'm doing my best to relay what Adam Mancini teaches in his newsletter through his website, so go and check him out for the professional breakdown of this. But we're here in the Discord discussing this every day. We actually identified this trade in the pre-market prep, this exact trade. So yeah, come and check us out. Link for the Discord is in the description. All right, with that, let's bring in the charts. Okay, so I've got the 4 hour on the left here, 2 minute on the right. We'll drop that down to 15 minute. But obviously, the real quick on the context, we put in kind of monster fail breakdown yesterday at 6808, maybe a couple of fail breakdown and a double dip fail breakdown, and pushed up 70 or 80 points off of that. So we had this monster fail breakdown at a range support. This being our kind of range from the last couple of days, and propelled us up to the top of the range. So we had that wind in our sails coming into the end of the session and into the overnight session last night, and then dipped a little bit off the close yesterday before lifting heavily into the evening session. There was first support down level reclaim triggered last night at 68.54. It's wrong day here. Yeah, so 68.54 here. This triggered. This was all a little bit choppy for me, so I decided not to get involved in this, and then woke up giving myself a face palm this morning to see we'd lifted 50 points up from there. But what that meant coming into the morning session was we're well above all of our pre-planned entries. So the first thing to do in the morning is then to start looking for potential new significant lows and levels that which we can trade around. And I've got this little box around the overnight flag that happened. This was first area of interest for me. We started talking about this in the pre-market prep last night, but this morning. What we had here is top of the flag around 76, base of the flag around 70. We broke out above that. So there was a potential backtest long here, which I was considering, and I don't typically trade those, so decided not to, but that lifted 18 points from there. And in so doing, set up a significant low for us to trade around come the open. So why was it a significant low? Well, it bounced 18 points that just about meets the requirement for a significant low, but on top of that, it also happened at a significant zone, the top of this flag. So those two in combination, you have that little bit of confluence to apply the fail breakdown technique to, or entry model to. And that's exactly what we got. So let's zoom in a little bit here, drop down to 2 minute. So we were talking about this right during the pre-market prep this morning. So that was going on right here, and there was some temptation to enter at this point, but being so close to the open, for me, your last 15-20 minutes before the open is a little bit too close, and off the open, it can rip up 10 points in either direction, and that's what we got. This is the open here, ripped down to 62 from 76, so 14 points. Ideal flush depth right in that sweet spot, and then snap straight back up to the level within a couple of minutes. This is 2 minute chart, and then with each subsequent sell rotation, sellers were unable to to continue lower when we're unable to lose this 64 level. And this is what we talked about in the pre-market. I think I said something to the effect, I'll just paste it in here, but I was looking for 64 to hold and then for us to recover 76 for an entry. So I'll paste that little excerpt in here. All right, let's crack into the trade plan for today. So obviously we're flirting with the 76 level, which is this kind of breakout level that we had overnight. I'll probably, if we can hold 64 off the open and recover this 76, then that's something I would be interested in from someone who's not in a runner right now. So that would be something like that. I'm not really interested in engaging it right here 5 minutes before the open, because to me it's always a bit of a crapshoot on that 50-50 which way it can push off the open. Okay, so with that we have our stage set. We have number one, the significant low that we're looking to trade around. Number two, the scary flush that's gone an ideal distance, and then third step is wait for the acceptance and the reclaim. And here we got my favorite type of acceptance to trade because I find it the most obvious and clear to read. You don't need to be looking, I don't typically look at a 2-minute chart during the day, but I'm just showing it here to show the swings up and down. But what we have here is we have that 14-point flush, return to the level, dip again, return to the level, dip again, and that happens maybe 4 or 5 times before we eventually push through. And with type 1 acceptance, where it's mature like that, I tend to just get in when we poke above the level by a point or two, and that's exactly what we got here. Did dip a little bit after that, so maybe could have waited for that final little bit of type 2 acceptance. If this is type 1 and then this is type 2, perhaps could have waited for that, but I was pretty happy with my entry overall on that. Let me just bring in the range chart to show that a little bit more clearly. So this is a 20 range chart, and this is the level we're looking to trade around, which was the London session low and the breakout from the flag. And then off the open, here's the open, scary flush, 64 holds, returns once, dips, returns again, dips, but very little continuation, returns again, almost pokes through, dips, says 1, 2, 3, returns for a 4th time, dips. I mean, each dip is not able to really test. This is the 64 level and certainly not able to get any extension to the downside, and then we poke up through, and that was my entry in there. This is the little bit of type 2 I was mentioning for a possible, if I had been perfectly patient, maybe waiting for that final dip below and go. So that would have put your entry right around 840 for a perfect entry there. And it got to, I took some profit at 83 from 77. 88 I think was the first target up. So fairly straightforward to get to that first level up from Adam's newsletter. And then for me, I was holding my runners beneath the lowest low here. So the lowest low is about 62. I had my runners stop down at 60. So obviously that hold, we did dip below the level here. No big deal. Took second profit up around the century figure and then held the runner for the rest of the day. So fairly straightforward, clean trade on that one. Any questions, put them in the comments or hit us up in the Discord. Always interested to get everyone else's thoughts on this, how they traded it. Hope everyone was able to execute that one successfully. I think it was relatively straightforward. All right, with that, I will catch you guys in the Discord and see you tomorrow. Thanks. Bye for now.